And hello traders, welcome back to Neely FX. My name is Michael Neely and this is the channel where I talk about foreign exchange trading and becoming a better forex trader. And today I wanted to talk about TradingForexForProfit.com. This is the site that I built to help me become a better trader because after years of trading, I found out that my trading was not as good as I thought I was. I did triple my account in 2014. Basically, I got caught up in the U.S. yen bull market that took off, and I didn't really understand why I made that money that year, but I was basically scalping and getting in and getting out with one, and then having all the trades add up to about 2% of my profit every day, or 2% of my account every day, and then getting out and staying out. And that's how I did it. I was also limited on time, so I had only had 2 or 3 hours to trade every week, and I usually didn't get started until 9 o'clock because I used to sleep in late. So it was quite accidental that I tripled my account that year. And then in 2015, algorithmic trading came out and changed everything. So with that, I do want to mention here, there is some risk disclosure I need to talk about, that this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have been a broker in the past, and I have held an NFA registration in the past, about 20 years ago. Now, forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And then here's the CFTC risk disclosure right behind that, right below that, that forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading forex, consider your investment objectives, experience, and risk appetite. And if you hear a chirping in the background, that is Henry, the forex trading parakeet. No, I am not in a burning building with the smoke alarm going off. So that is our cute little pet bird who likes to throw in her 2 cents every now and then. And yes, Henry is a girl. You just can't plan these things. But at any rate, let's go ahead and get into this and let's see what we're talking about. This is how the free workflow helps traders build structure in their trading. This is one of the things that I liked in my trading when I first got started. Is I was literally just throwing money at the market and occasionally got lucky. And then in 2014, I did the same thing over and over again, but I didn't realize that I had built a structure, and then I completely forgot how to do it. So the Free Forex Trading Journal can help you it can help you build a good, help you pick the direction and the pair and everything else, and help why most free journal options fall short. Many free journal options are just really spreadsheets of stripped down logbooks. They may help after the trade, but they don't always support the workflow. So this helps you track your trade stages. You start with a planned trade, and then let's go ahead and go to that. Can I go to that? I'm in my free account. I don't think I've set up an account. So let's see what we can do with this. Let's go to the dashboard from here, and then go to the accounts. Yes, first I have to set up an account. So we'll go with forex.com. They don't pay me to write that. Oh, well, let's just go with, although my free accounts, or pardon me, my live accounts are with forex.com. We'll go with a test account. I highly recommend them. So if you want to do that, then that's fine. Broker firm, we'll leave that blank. We're not going to import any activity. We're going to start with, let's say, $1,000, because you can start with as little as $50 in some places. There, and current equity is also $1,000. So with here, upgrade to Pro, we're not going to do that. Instead, we're going to come down to the journal, and we're going to plan our trades. The first step is to plan our trades. You can also put in a missed trade if you decided not to pull the trigger on a trade. So let's go to plan trade, and then go to, because those are the only options you have, are really plan trade. And let's say you're going to buy the euro versus the dollar at 1.6. That number's already passed us, but that's okay, because this is just merely a simulation. This is not, let's say we want a 200 pip profit out of that strategy. We haven't set up our strategies yet, so we're going to go with no strategy, and those are primarily for after the trade, so we're not going to do those. We're going to add the planned trade. So with this, you go to the planned trade, and then let's say you execute the trade. You're going to open the trade, and let's say your entry price is 1.1605, because there's always some leeway to what your desired and your actual trade is going to be. And then here we are. We have the the trade right here. Now we're looking at a 39% risk to reward ratio. That's highly unlikely. However, that's what we have set up right here. So then we're going to close the trade and then put this in here. The exit price was 1.19. We'll just say we got a 39 risk to reward ratio, which is absurd. You're never going to get that. You might get 1-to-1, 1.2, something like that, 1.12 or something like that. So with that, you can also come in here and review the trade and realize that this is all, did the trade fit the plan? Yes, no. Was the position size appropriate? Was stop loss respected? And would you do this trade again? Now, if you got, in real life, if you got a 59%, a 59 times risk to reward ratio, then of course you could do this trade again. However, this actually did not take place. So I do want to point that out too. You're never going to see a 59 times risk to reward ratio. But that is basically how you do that. You start with a planned trade, and then you go to the whatever. After that, you go to plan trades, and then once you decide that you're going to do this trade, you go to open trades. Once you execute the trade, you go to open trades, and then after that, you close the trade after the trade is completed, either profitably or negatively, and then you can review the trade and review the checklist there. So with that is all I've got for today. But I just showed you how to start an account. Start your free account. You can definitely do that, and then you can also start a trade, start a planned trade. And then once you see an opportunity on the charts maybe, and you want to see if it takes place in about 50 pips, something like that, then by means, go ahead and do that. When you open the trade with your broker, you go to your open trades. The trade will automatically go to your open trades, and from there it goes to your closed trades. And that way you can manage your trades and decide which one works best and which one does not. So with that is all I've got for today. Happy trading, and I'll see you in the next video.